So in this lesson, we'll cover who purchased $1 billion in Bitcoin, why they purchased it, and who's quickly following their lead. There's a concept called follow the smart money. The smart money are considered those institutional investors who have access to millions and millions of dollars in research. Thousands of analysts looking at these problems, coming up with assessments to help these smart money institutions figure out where to put their money, where to put their capital, right? So this year, we've seen an influx of institutional investors pouring millions and hundreds of millions and even billions of dollars into Bitcoin because they're starting to realize the same thing that I've told you before, that Bitcoin is a digital currency, but more importantly, it's a digital asset that's provably scarce, right? So there's a company called MicroStrategy, which is a software company. They did pretty well and they had some cash reserves. Their CEO, he made a decision to say, hey, you know what? We're holding $500 million in USD, right? The government is constantly printing more and more. So we're losing purchasing power of this money that's just sitting here that we don't necessarily have anything to do with at this particular moment. So they started to look at Bitcoin and they made a decision based off of their analysts that said, hey, we need something that can potentially drop 50% in value, yet still gain 10% in value year over year. So they actually dumped $500 million into Bitcoin. They emptied their reserves and pumped it into Bitcoin. Not only that, they actually raised more funds after that to finish out the year with over $1 billion in Bitcoin purchase. Now, this company could have purchased any asset, right? They got $1 billion. They could have purchased real estate. They could have purchased art. They could have purchased gold, but they decided to purchase Bitcoin. That's a smart money decision. Millions of dollars went into that decision. Countless numbers of meetings went into that decision. Probably hundreds of people had to meet in order for them to make that decision to purchase $1 billion worth of Bitcoin. We've seen that these institutions have started to allocate a certain percentage of their cash reserves to the Bitcoin network. Most recently, we've seen a company called MassMutual. MassMutual is an insurance company, right? Their entire job is to manage risk. They put $100 million of their cash reserves into Bitcoin. That may not be a lot to them, but the fact that their analysts said, hey, we need to put some money here, it shows you the direction that smart money is thinking. And us as being smaller retail investors, for the most part, we can piggyback off of these smart money decision makers, position ourselves to capture the same benefit that they're hoping to capture without extending the amount of resources that they had to extend to get their answer. It's like, hey, these guys have millions and billions of dollars. They have people who are vouching for them, who are guiding them, who are very intelligent, who have access to resources and data that we can't even imagine. And they made this decision. Okay, let me do my due diligence on this company and make sure that they're equipped to make that type of decision. And if they are, maybe, just maybe I should follow them, right? That's a strategy. And it's called follow the smart money. So I wanted to demonstrate the difference in who's pouring into Bitcoin during this particular time. We have tons of institutional investors moving in. And at the beginning of this course, I mentioned those smart investors, they think long term. So these people are holding Bitcoin for a long period of time. They do not plan on selling this Bitcoin, because they aren't looking for quick trades. They're looking to build wealth and to increase the value of their companies. We're seeing that the valuation of these companies that are buying a large amount of Bitcoin, they're doubling almost overnight because of the extreme growth rate that Bitcoin is experiencing, right? And they're looking for that to continue, or else they would not put all of this capital into the Bitcoin market. I'll give you guys a little more information, right? Most institutional investors can't put the amount of money that they really want to put into certain markets unless it hits $1 trillion market cap. Because the pool of money, or the pool, is just simply too shallow. It's like a whale trying to jump into a pool. It would empty the entire pool out. Those whales, those institutional investors with hundreds of billions of dollars, not just a billion, but hundreds of billions of dollars, they can't pour into an asset like Bitcoin until it reaches at least $1 trillion market cap. So once Bitcoin reaches $1 trillion market cap, and it's currently somewhere around 600 billion, if I'm not mistaken, when it reaches $1 trillion market cap, you'll start to see more and more institutions pour hundreds and hundreds of millions of dollars into this asset. And what does that mean for us as retail investors? That means that the Bitcoin that we already have will increase in value because it's becoming more and more scarce as they take more Bitcoin off the market. So the name of the game is to get in now before the big money fully gets in, right? And to get in now while the government is printing all of this extra money, which is causing inflation to send our assets up. So Bitcoin has a lot of positive things working in its favor right now. So to kind of wrap it up, always consider what the smart money is doing. If smart money is pouring billions of dollars into something, it's probably a good idea to look into it and to understand why they're putting this money into this new digital asset called Bitcoin. So I hope you have a much better perspective on why it's important and who's participating in this new digital economy. And until next time, I'll see you in the next video.